The ability to read candle bars on different time frames is both a skill and an art. Analyzing the market action in real time in an objective manner can yield you good profits every single day from the markets. Without wasting any of your precious time, let me tell you what I'm going to go over in this video. I'll discuss the market context, including the economic news, what has happened and what's going to happen in the future, and then the best trades to have taken today using candlestick analysis and other key elements. I'll show you how I was able to make some Benjis today, so without further ado, let's jump right in. Let's go over the market context today, including the economic news. We'll start with the economic calendar. So today on Wednesday, April 10th, we have CPI at 5:30 a.m. and then we're going to have FOMC minutes at around 11 a.m. PST. 2 p.m. Eastern Time, CPI was 8:30 a.m. Eastern Time. And so CPI happened in the pre-market. If we take a look at the market, in the S&P 500 ETF, SPY, we can see that we had a huge sell-off with CPI economic news, basically from our key level at 520 all the way down to 512 and bounce from there. So that's what happened with CPI, and it's important to note that we have another meeting, FOMC meeting, that may affect the market. It'll probably, not make any major moves until the Fed chairman speaks. And so that's the current market context with the economic news. If we take a look at the Qs, the same thing. Came from our key level at 443, from our supply level to our demand key level at 434, and bounced from there. So that's what happened with CPI. I wouldn't swing anything or take any long-term trades into FOMC, because the result and the effect of the news on the market is uncertain and you can never predict it 100%. So I'd wait. The market is choppy right now in anticipation for that. And so let's go over our trade to take. Every single day, there are multiple opportunities in multiple different time frames and multiple different stock tickers using candle bar or candlestick analysis in order to make some money. As chartists using technical analysis, reading the market action accurately, all in real time, is crucial for you to extract profits and in taking high probability setups. Keep watching to see how other important factors, along with candle bar analysis, help give me the confidence to take a trade that yielded me $700 of profits. Let's start with the trade Nvidia that I took today. Let's start with the stock Nvidia. So Nvidia was a stock I chose to trade today. So first things first, I had my key levels mapped out. I was assessing the current market context, and I was taking a look at the SPY and the QQQ simultaneously to see how the stock is acting relative to the market, right? That's something you want to be doing as you're taking a trade in a particular stock. So with the ES in the first couple minutes all the way up to the first hour is pretty much just been chopping. But what does Nvidia do, right? Out the gate, it gives us, a bullish candle and then a huge second 5-minute candle, to get back to our key level at 857. It turns the supply level into a demand level and then holds that, right? At the same time as holding that level and not rejecting it, the SPY is still chopping, right? Within this range, giving a lot of inside bars. And so that's when I get in for some calls for the long side. I see that it's holding at 857. I set my tight stop loss at that level, 857. If it goes below that, I'm getting out. No hesitation. I sit back and I look at the chart, look at the price action, and I'm comfortably sitting in the trade, letting the trade work out for me, right? Why did I get in? The key level right here, I'm looking at the relativity, in this case, the relative strength compared to the market, the ES and the NASDAQ. I see this on the 2-minute chart. I'm seeing it hold several times with these bullish wicks. This is what I'm talking about when I'm talking about candlestick analysis, right? You need to be able to read this in real time and take the trade with no hesitation. You have to be a sniper and with no hesitation, go for the kill. This is your food that you have to eat, right? This is, money you're leaving on the table if you miss it at the wrong time. So On the 2-minute, you see those bullish wicks. On the 5-minute, you see that it holds pretty well with these bullish wicks as well. You should get in, set the stop loss, and on the first move up, I essentially take my profits, knowing that it can always reverse anytime, and it's a scalper's market. So you take your partials, leave some runners, and let's say you take a partial out right here, take some more out right here, and then as it's falling down, back to your adjusted trailing stop loss. Every time the stock moves in your favor, you want to adjust your stop loss, right? You don't want to just keep the same stop loss. So let's say you adjusted your stop loss up to here. Well, it hit it, so you get out. And there's no way that the trade could be an L for you, right? The only way it can be an L is if you didn't adjust your stop loss and it reverses all the way back to your entry price. So that's a trade with Nvidia. With that, I went in with pretty light size and made $736. I can show you guys the premium chart. So this is where I get in on the premiums. Get in at 27.33 at 6:44 a.m. And then around 6:51, 6:53 a.m. I take my partials out at premium prices of 31.1 and 30.96. So from 27 to 31 was my premium spike. You can see that it went all the way to 35. But like I said, you never know what the stock is going to do, right? So that was my trade on Nvidia. Let's say you weren't able to cash that in real time, right? What does it do later on in the day? It gives us a nice bull flag. It gives us a trend line, and overall still staying relatively strong. You can see that, by these bullish wicks, it's still showing us bullish momentum and upward pressure to, stick with the EMAs. In this case, it's a 9 EMA on the 5-minute. And with the ES, it's kind of chopping, but it's still moving upward at this point. And so what you would do is take the entry right here on the break of the trend line, set a tight stop loss below these candles, and then on the first move up, take a partial. On the next move up, you can exit your position or leave some runners. In this case, with an adjusted stop loss, I'd get out right here after I adjust my stop loss up to 868 and call it a day. I could have taken that trade as well, but I didn't. I was satisfied with the trade I took this morning. But yeah, every day the market presents itself with opportunities if you wait, stay patient, and have the clarity to take the accurate trades, right? Let's take a look at the stock Tesla. So with Tesla, in the pre-market, it's kind of giving us a bear flag, and in the market open, well, first things first, we got to map out our key levels, right? So my key demand, my key supply level right here at 174. I'm assessing the market in tandem with the market and the stock. And so my key level right here, while the market is chopping, what does Tesla do, right? It rejects this level. You can see by these two bullish wicks or these two bearish wicks. And you can get in. Ideally, I don't like to, trade the market open. It's a bit too early for me, but as long as you set your stop loss and your risk limit, you can take this trade right here, with this flag. But it's not ideal, not optimal. So let's say you don't take this trade, right? If you did take it, you could have taken your exit right here, taken some more partials out, and you could have made money. Let's say you didn't take that one. The more optimal trade was right here. Gives us another bear flag, another one of these trend lines with a lot of bearish wicks, right? It's rejecting this EMA but holding it. And so on the break of the trend line right here, you get in for some puts going short. Set your stop loss right here at 173. And on the first move down, you take a majority of your position off and hold some runners with an adjusted stop loss, right? I took the screenshot, not knowing the full extent of what the move did, but what would you do, right? You can take a look at the chart and think for yourself what you would do, right? Where would you adjust your stop loss? Where would you exit the majority of a position, right? And where would your next key target level be, right? So take a look at the chart and think for yourself what you would do. In this case, with every trade, you just have to stay patient and not have any biases, right? Stay as objective as possible. Don't be emotional. Don't think it's going to do one thing or another. Just assess what the market is doing and what the candlesticks are telling you, right? You can look at these candlesticks for what they are. Don't be delusional. Don't start hallucinating. What is this showing you right here? It's a bunch of bearish wicks showing selling pressure, right? It doesn't want to come up. Don't think that it's going to come up when it doesn't want to come up. These two bearish wicks on the key level and these bearish wicks along the EMA is everything you need to, everything you need to give you confidence to take the trade short at the break of this trend line, right? These are time-tested principles that have been working for hundreds of years. As stocks make their move, you as a technical analyst and, a chartist of the market needs to look at the chart and assess it and take the trade that's, objectively in your favor with the highest probability. And so we'll keep that short and sweet with Tesla. Let's take a look at SMCI, right? What did this do? SMCI, another semiconductor stock, gives us a huge, move up. This is the 2-minute chart, gives us a huge move up. But you don't want to chase this, right? What if it just rejects it at this level, right? We have a key level at 906. We need to make sure that we assess the price action at that level. So what does it do at that level, right? It kind of breaks it and then rejects it back down. But so far, while the market is just chopping, what is the overall trend, the micro trend of SMCI, right? It's upward. It bounced from this key level, this key support level at 855. And overall, it's in a bullish micro trend, right? And it gives us this, perfect bull flag that, you can anticipate. It's riding this EMA right here. And so you can get in a little early if you want, anticipate it. But let's say you get in on the break of this trend line, set your stop loss below that candle. And on the first move up, you take your partials, right? Take 50 to 75% of your position size off and adjust your stop loss, right? In this case, trading isn't perfect, It's not 100% certainty, right? If it was, I would be in a hedge fund, I'd start a hedge fund on my own and, do my own thing, not be here on YouTube, right? But so you take your partials out right here on the first move up, and what does it do after you adjusted your stop loss, right? Where would you adjust your stop loss? I'd adjust mine at this level right here so that I don't give back any profits. And so once it breaks that, you can take out, the rest of your position off or leave one or, 2 runners that, nothing that'll affect your overall profits. And what does it do, right? It just kind of consolidates. So who knows what the market will do? It may just, break out of this choppiness to consolidation to the downside or to the upside. You never know. But for now, I'd wait. I wouldn't, for me, I don't like trading this, right? I don't like to stay in a position with so many inside candle bars like this, right? At this point, it's in a balance between buyers and sellers. You want to anticipate the breakout, and upon the breakout, enter with that trend. And that'll give you the highest probability in making money, right? And so, with, candlestick analysis, along with the other key factors that I've mentioned, all of these key elements comprise of the market action in which, you as a technical analyst should be able to objectively see it in real time and take the correct and accurate trade. Even with the market being choppy and, with economic news in the pre-market and another one at, in a few hours, you can see that, with key elements of relative strength, candlestick analysis, important key levels, and, bull bear flags and trend lines. All of these factors give you a, high sense of confidence and areas of confluence in which you can take the trade. And always keep in mind, your stop loss. Trading is a business, right? So you want to always keep in mind that you want to keep your overhead low and keep your costs low. And at that point, you shouldn't be anxious. You shouldn't be trembling, with your heart pounding. Just let the trade work out. If you're way too emotional and way too shaky about it, it's probably because your position size is too high. You're sizing too much. So take a bit of size off so that, if the trade doesn't work out, you're okay with the loss. Trading isn't 100%. Take the loss if it doesn't go your way. But, if you haven't seen my other videos, I'm pretty much teaching the same principles that have lasted in the markets for the past, century. And it's always been happening, right? You can backtest it for yourself. This is just how markets move. This is how stocks move. It's not rocket science. You just need the ability to read it in real time, objectively look at what's happening on the chart in front of your eyes on the screen, And whether the fundamental news is up, down, sideways, or doing hula hoops, as technical analysts, we don't care. We just look at the candle bars and the other indicators, and we take our trade, with confidence. That wraps up today's video. So far, I'm actually on a nice little streak, in terms of consistently uploading videos. So I hope to keep that going. If you appreciate the value I provided you, please don't forget to like and subscribe to the channel. Comment any other topics you want me to go over down below in the comment section. I'm wishing you many more Benjis in the future, and I'll see you in my next video.